May 17, 2022 was a historic day for Indian stock markets. The Life Insurance Corporation of India (LIC) was listed on the stock markets on that day. The IPO is India's largest IPO yet, and the company raised Rs 21,000 crore from the public. It saw reasonably good response from all category of investors.
When last year LIC came out with one IPO, it attracted a lot of attention because its size, till now it is the largest IPO in India, 21,000 crore the company raised. And the second, after a long gap, insurance company came out with an IPO, and third, it's a PSU company. So all these three attracted a lot of attention from investors, especially retail investors, employees and shareholders and policy holders of LIC. So they invested heavily into the market. Besides this attraction, they had also had some kind of discount from 45 rupees to 60 rupees on the IPO price. So these investors had invested in that IPO.
The life insurance giant has performed poorly in the stock market since day one. On May 15th, it closed at Rs 567.95 on the BSE, a steep fall from its IPO price of Rs 949. Even its highest price since listing is Rs 920, below the IPO price, and that too on listing day, May 17th. Due to this underperformance, nearly 7 lakh retail investors have exited LIC. So, what should retail investors do now?
See, the retail investor, while applying for the IPO, they must have done some kind of background work, and they should have analyzed the prospects of LIC and their own risk profile and goals. So, if the LIC had financially performed according to their expectation, then retail investor can hold on to the stock. On the contrary, if they feel LIC failed to meet their expectation, it is better for them to exit from the stock. However, one thing I would say retail investors should not do is cost averaging. That is, a lot of investors try to buy stocks at the dipping price, try to make the acquiring price lower, but that will not work. If they feel that company has not performed well according to their expectation, either they should quit and reconsider at right opportune time.
For LIC, retaining the investors' trust is key. To do this, the company would have to increase its financial performance.
From financial performance perspective, last year LIC did very well, but the problem is most of the net profit, the bottom line got boosted because of that accounting rule in which LIC has shifted investor wealth to shareholder wealth. That has boosted LIC's bottom line. It should concentrate on the core business, that is insurance business. They have lost a lot of market share to the private player. Now they should come out with a lot of innovative products to boost their market share as well as the other important metrics. Once the LIC concentrate on the core business and improve, it will reflect on the share price as well.
Will LIC's poor performance impact upcoming IPOs?
It will not have any major impact. The future primary market looks very healthy. After nearly 2 decades, Tata is coming out with 2 IPOs. One is Tata Technologies and another is Tata Play. After 3 decades, nearly another big group, TVS Group from Chennai, Tamil Nadu, is planning to launch its TVS supply chain. Jio Finance is likely to come out with an IPO. So these are all showing that the upcoming IPO market looks very healthy, and quite shortly we can see a national stock exchange is also likely to hit the market. So there are some big names are there that will definitely revive market participant. Only caveat is they should come out with good pricing, and that should help the IPO market well.